very warm welcome to Daily Dispatch powered by HSBC. I'm Priya Sheikh, and here's our news roundup for the day. The FinTech Open Month, organized by the Niti Aayog in collaboration with PhonePe, is coming to an eventful end after an exciting month of conversations and debates on the future of India's FinTech space. The event will end tomorrow at 4 p.m. with a glorious closing ceremony where PhonePe CTO Rahul Shahri and Niti Aayog senior leadership will announce the winners, highlight the most innovative solutions, and talk about learnings from the month. A very warm welcome to Daily Dispatch powered by HSBC. I'm Priya Sheikh, and joining me on this very interesting conversation is Vikram Gupta from IvyCap Ventures. Thank you very much, Mr. Gupta, for joining us today. I want to firstly talk a little bit about your latest fundraise, the $200 million, and a little bit more than that. So tell us a little bit about what the fundraise means for you and how this fits in with the IvyCap strategy.
Thanks, Priya, for having me on this program. Really appreciate that. This is our third fund, Priya. Our first two funds were relatively smaller. In fact, we were originally planning to raise $200 million. But our existing investors have come back in a big way. In fact, 70% of our commitments have actually come from the existing investors. This time we are also seeing substantial support from family offices that we had earlier not approached, Fund 1 and Fund 2. We are quite excited. These are exciting times, I would say, as opportunities are further building up for investments. And we are looking forward to deploying this capital.
Right. When you talk about deploying this capital, I know that you've invested in very interesting companies, a lot of consumer-facing companies as well. When you look at the whole consumer tech space, so tell us a little bit about what would be the areas of focus this time around, and what kind of average ticket size would you be considering?
Yeah, Priya, actually, we are not changing our strategy from the investments perspective because we continue to see opportunities in the consumer tech space, health tech, B2B SaaS enterprise, with the focus on AI, machine learning, IoT, blockchain. There are quite a few opportunities out there, including fintech and also edtech. And we have built a very interesting portfolio across all these areas. Our ticket size will be around 30 to 40 crores as the first investment that we will make. The key difference between what we have done so far and what we're going to do now is that we're going to reserve a substantial amount of capital as follow-on for our companies that we're going to invest in at Series A. So that's something which is a lesson learned from our previous investments, and we realized that companies scale up very fast, and you need substantial capital as they grow. So we're still going to focus on about 20 to 30 companies total, but really work very closely with them, and then make sure that the further support is provided not only in terms of the follow-on capital, but also continue to provide them support through mentorship, hands-on support through taking board positions and working very closely with the entrepreneurs, which is exactly what we've been doing so far in our Fund 1, Fund 2 companies.
Right. I want to also talk about the portfolio companies that you have. Will there be more exits that we can expect over the next couple of months? How do the companies that you're not going to be looking at follow-on rounds for operate within your portfolio?
Yeah, so we've been very returns-focused fund. In fact, we've returned substantial capital to our investors already from Fund 1 and even in Fund 2. Fund 1, out of 10 companies that we invested in, we've already made 4 exits, and the 5th one is currently in process. In fact, you'll hear very soon another news from our side where we are doing a very good exit from one of our companies in Fund 1. If we add up all these exits, we're talking about a 240 crore fund actually returning in cash about 640 crores just in 5 companies out of 10, and another 5 companies still sitting in the portfolio and with substantial value still sitting there. So I would say we've been quite fortunate with the kind of value which you created for investors. Fund 2, which was about 535 crores in size, with the 3 exits, 2 last year and one that we're going through right now, we would have returned about 32% of the principal of the investors, which is, again, I think we are told by many people that that's quite good as compared to how the market is, and we feel quite good about that.
Absolutely. I want to talk a little bit about the valuations in the startup space. As we speak, many of the startups have seen exponential growth in the last 1.5, 2 years amid the pandemic. And valuations for the companies have naturally also increased. And we've been speaking to so many investors out there in the startup space, and everybody has just one comment to make, that valuations are pretty high. But so is the kind of availability of cash. So, what's the kind of dynamics that you see playing out there?
That's a fair comment, Priya, in terms of the valuations. Of course, I remember investing 15 crores in Purple in 2015 as Series A round, where we took 30% stake in the company at that time, right? So you can imagine that we invested at 50 crore post-money valuation at that time. The company was doing very well even at that time. And if we were to look at a deal like that today, uh, it'll be a very different story. I think part of the reason is that a lot of capital is flowing into India. But I think one needs to keep in mind that you have to understand the broader construct of the startup ecosystem in the country. There are about 62,000 DPIIT startups in the country. Almost about 25,000 are angel or seed funded, and then in our estimate, almost about 1,000 out of that are Series A funded. So the gap between angel seed and Series A is substantially large, and that translates to now close to about 100 unicorns, right? So that's the way the pyramid is structured in India about the startups. That in the later stages, Series C onwards, the number of startups is very small, and the capital chasing is actually much larger at those stages. That is where the valuations are actually, I would say, slightly in favor of entrepreneurs or investors, who have to deploy their capital, may end up paying higher than what otherwise one would like to pay. But at Series A, given the demand supply gap, you don't see too many funds at Series A, primarily because there's too much of hard work involved. There is a substantial number of good opportunities available, very few investors who are willing to lead Series A rounds. So we feel fortunate to be in that space where at any point of time we are evaluating curated startups of almost 2 to 3,000 startups, and all we have to do is about 20 to 30 deals from our third fund. So therefore, we are not very worried about valuations in that sense. We'll do deals based on what we believe is right for our investment. So we're quite excited about it in that sense.
All right. On that note, thank you very much, Mr. Gupta, for joining us today. It's really been a pleasure speaking with you, and we wish you all the very best in the journey ahead and with all the fabulous deals that you have planned. So thanks so much for your time.
Thank you, Priya. Thank you so much for having me.